Welcome back to my YouTube channel. So we'll continue with the revision for December 2024 mock. And today I'll do question 24. So I'll read the question. Your audit client, Karim Limited, a listed company in manufacturing, is yet to finalize the financial statements for the year ended 30th June 2024. The company recruited a new accountant who has been in the company for 2 weeks. To avoid delaying the audit, the accountant has provided the following list of balances. So we have a list of balances. The shillings are in thousands, from ordinary share capital of shillings 10 each, all the way to sales and distribution costs. So as you began the audit process, you discovered the following adjustments that should be made to finalize the financial statements as you carry out the substantive tests. Number one, as at 30th June 2024, the following balances were relevant. So we have a rent income receivable of shillings 20,000. Then you have prepaid sales and distribution costs of shillings 6,610,000. Then number two, the allowance for doubtful debts was to be reduced to shillings 3.45 million. Number three, corporation tax is estimated to be shillings 87 million. Number four, half of the interest on debentures was still outstanding as at 30th June 2024. Then number five, depreciation is to be provided as follows. So we have non-current asset, we have the rate per annum, then we have the method. So we have land, the rate per annum was nil because it's you can't depreciate land. So there was no method. Then building was at the rate of 2% per annum and on a straight line basis. Equipment was 10% on a reducing balance. Motor vehicle 10% on a straight line basis. The number six, the directors have proposed that a dividend be paid to preference shareholders and to the ordinary shareholders in bracket 10% after a transfer of shillings 11 million to the general reserve. Required, prepare an audit schedule for eight columns with the following heading. So this was a mistake. So it was supposed to prepare an audit schedule for 6 columns. For 6 columns with the following heading. So we have the original trial balance without adjustments, then adjustments, then the adjusted trial balance. Part B, you have been provided with a summary of Karimu Limited, a listed company balances. So we have shillings in thousand. Profit before tax was 5,000. Revenue was 80,000. Total asset was 150,000. Roman 1, determine the planning materiality for the audit based on the revenue, profit before tax, and total asset. Justify your answer. Roman 2, then Roman 2, you have been given the following transactions. Please determine the transaction that are material by carrying out performance materiality based on one above. So we'll determine the planning materiality. Then we'll use this transaction to determine which transaction here is material by carrying out what we call performance materiality. Okay, so I'll do part 1. I'll start with part 2. So I'll prepare an audit schedule for 8 columns with the following headings. So I'll do that down here. I'll do it here. So we'll have the first one, we'll have the original trial balance. You have the original trial balance. Then we have the adjustments. Then we'll have the adjusted. Finally, we'll have the adjusted trial balance. adjusted trial balance. Adjusted trial balance. Okay, so allow me to bold this. Then both will have the debit on the credit side. So debit, credit for that. So I'll highlight that. Then you merge. So I can merge and center. It's okay. Yeah, then also for adjustment, I'll merge that and center. So it will also have debit and credit columns. Debit and credit. Then this also, so I'll just copy instead of, and then I just drag credit. Go to bold. Then the shillings were in thousands. So just copy from the information provided. So the shillings were in thousands. So just drag. Love that. So I'll also bold that. Good. Yeah, so I'll transfer the information provided, the balances here, because that's what I will work with. I will work with this information here to prepare the original trial balance. Yeah. So I'll copy this. This is what I will copy. So I highlight up to sales and distribution cost, then Control C, then we have Control V to paste. Copy and paste. So Control, then V. Okay, so I'll just start. So ordinary share capital, that will credit because that's an equity. So you credit that. Sorry. Yeah. Yeah. Then the next item is 10% preference share capital. That's also equity share premium and general reserve and retained earnings. So all this will appear on the credit side. So instead of copying that way, you just drag. Now that we have copied one, you drag all the way under credit side, all the way to retain earnings. Yeah, to save on time, because I told you that this paper is all about speed and accuracy. Yeah, so you have to move with speed even as you become accurate. So inventory. So inventory, that's an asset. So we'll pick it on the debit side. Yeah, all assets we debit. Then cost of sales, we'll also debit it. Cost of sales, debit it. Then we have 8% debenture. 8% debenture, that's a liability. So we'll credit it. 8% debenture, liability. Trade receivables is an asset. So we debit that trade receivables. Then trade payable is a liability. We'll credit that. Trade payable. Land at cost is an asset. So land is an asset, so we'll debit that. Yeah, so I'll check land at cost, building at cost, and equipment at cost, motor vehicle at cost. All those are assets, yeah? So I'll just drag on the debit side. So once I've selected that, I'll drag up to motor vehicle, yeah, because all this are supposed to be on the debit side. Then accumulated depreciation. So we have building. So we'll start with building. So accumulated depreciation, we credit. Yeah, we credit that. So we'll start with the building. It was that, yeah? Yeah, so for the building, but there are 3. So I'll drag all the way to motor vehicle. Yeah, you just drag to save on time. Yeah, then sales is also on the credit side. So let me just drag. Yeah, and it will copy the sales. Yeah, so rent received, that's income. So it will be on the credit side. Yeah, that's an income. Yeah, it's not an expense, it's an income. So we'll also credit it. Rent received, credited. So allowance for doubtful debts, I told you that it's on the credit side. So I just allow me to drag, yeah, so that it copies that. Bank overdraft also is a liability. So it's on the credit side. Then interest on debentures is an expense, so we'll debit it. Interest on debenture, debit it. Administrative expense, so we debit that. Yeah, and also cash in hand is also an asset. So I'll just drag all the way to sales and distribution cost, because even that is an expense. So I'll drag all the way there. Yeah, so I told you that when you are done with the original trial balance, so you leave spaces for adjustment. So I'll count the additional information and see how much space I can leave. So we have 1 up to 6. So I'll jump 8 spaces. 1, 2, 3, 4, 5, 6, 7, 8, then 9. So I'm going to sum this here. Yeah, let me just put it there. So I'm just equals to sum. Yeah, and it has to balance. Yeah, you have to balance the original trial balance. Yeah, so I'll sum from here all the way. That's the last item. Yeah, so I'll have that there. So I'll drag it to see if it will balance with the credit side. Yeah, so it has balanced at 1214,000. Yeah, so I'll drag all the way for the remaining. Yeah, for the remaining columns, that when I'll be doing my entries, they balance automatically. Yeah, so that when you do your entry, you can be able to follow and see if they're balancing automatically. Yeah, so that's it. So I'll create a top border. I'll create top border. Then I'll create bottom double border. Yeah, that. Then you can also bold this. Bold that. Yeah, so we have done with the original trial balance, and on this only you are supposed to get 4 marks. Huh? Yeah, and in these questions, always try to get the answers correctly. Yeah, try to get the balancing figures correct. Yeah, try to get the balancing figure correct, because you have the values, you are already given the balances. So it's upon you just to know how to prepare trial balance. In fact, your knowledge, they're testing your knowledge on either you know how to prepare a trial balance. Yeah, so I'll go to adjustments. So adjustments, I say that we go to additional information. That's where we get our adjustments. So I'll go to additional information number 1. And number 1, they're saying, as you began the audit process, you discover the following adjustments that should be made to finalize the financial statements as you carry out the substantive test. Yeah, so the first adjustment, number 1, as at 30th June 2024, the following balances were relevant. So rent income receivable was shillings 20,000. So rent income, that will be a double entry. So it is an income, so it will credit, will debit. So I'll start with the debit side. So we'll debit cash in hand, which is here. So we'll debit cash in hand. So you have that. So it is 20,000. So I'll put 20 because the shillings were in thousands. Then I'll credit the rent received account with the same amount, with the 20. Yeah, that's the first double entry. Then number 2, the second double entry and additional information, number 1, is prepaid sales and distribution costs. Yeah, so we'll have a prepayment. We'll create a prepayment account. So there was a prepayment. Yeah, so that's what I was saying. You leave the space for this adjustment. So prepayment, that's an asset. So we will debit it and adjustment. Yeah, don't go back and do it under the original. So prepayment, it was the amount was how much? It was 6610. Yeah, 6610. So we debit the prepayment account, then we credit the sales and distribution cost account. Yeah, because that was a prepayment. That was a prepayment. So we'll credit to the same. Huh? And you can see it's balancing slowly, 60, 66, 30, 66, 30. So we continue. Number 2, additional information number 2, the allowance for doubtful debts was to be reduced to shillings 3.45 million. Yeah, so you go to allowance for doubtful debts and you debit the account, yeah, because it reduces. So you'll debit the allowance for doubtful debts account, yeah, with 3450. Then you credit the trade receivables because it reduces, the allowance reduces the trade receivables account. So it was 3450. 3450, that's the double entry. Then go to the next item, slowly. So we go to number 3. Corporation tax is estimated to be shillings 87 million. So there was tax. Yeah, so tax paid, or you can say corporation tax paid. So I'll say corporation tax. Yeah, so that's an expense. So you'll debit it. It was 87 million. So I'll say 87,000 because we are working with thousands. But what is the double entry for this? So the double entry, it was an estimate. It was a proposal. Yeah, so we estimate. So I'll create an account for accruals. Yeah, so my accruals will be, so corporation tax you debit as you credit accruals account, which is a liability. So we have a liability of 87,000 because it was just an estimation. It was a proposal. Then we continue to additional information number 4. Number 4, half of the interest on debentures was still outstanding as at 30th June 2024. So interest on debenture, which amount were we supposed to pay? So we had an 8% interest on debenture, which is 8% of 15,000. So that will give you 1,200. So we only pay interest on debenture, we only pay 600 instead of paying 1,200. So if you are told that it is outstanding, then it means that interest on debenture here, we'll do the adjustment. So we'll do the adjustment. So we'll debit the interest on debenture account with the 600, the one which we'll pay next year, the one which is an accrual. Yeah, so we'll debit with 600 interest on debenture account. Then we credit the accruals account with the 600 because we only pay 600. The other 600, the balance is an accrual. So we'll have to include it here. So we'll add it to 87,000. So I'll allow me just to say 87,600 for that, yeah, for that matter. Yeah, I think you have understood that. Then we'll go to the next item, the next adjustment is depreciation. Number 5, depreciation is to be provided as follows. We have land, building. So I'll start with the building. I told that building, the depreciation for the year was on 2%. So if it is on a straight line, that it means that it's depreciation on cost. So I'll say equals to, so you take 2%, you multiply by the value of the building at cost. So the building at cost, the value was 60,000. So I have that depreciation. Then I'll do the same for equipment. Equipment was told it was 10% on a reducing balance. So for reducing balance, we'll say equals to bracket. You take the cost of equipment at cost, then you subtract the accumulated depreciation of the equipment because it is on a reducing balance. Then you multiply by the rate of depreciation. So you'll get 810. Then motor vehicle on a straight line, you just take 10%. Then you multiply by the value of the motor vehicle at cost. So motor vehicle at cost. That is straight line. That is straight line. So I have those values there. So I'll just come and write here depreciation. Yeah. Depreciation. So it is depreciation of building. Then we'll also have depreciation of equipment. And finally, we have depreciation for motor vehicle. For motor vehicle. So depreciation for the building. Yeah, it's an expense. Sorry, it's an expense. So we'll debit it. So under adjustment, we'll debit it. So you just come and select. All those depreciation are expenses. So once you select that, to save on time, you just drag for the 3 up to motor vehicle. Then the double entry for this will be on the accumulated depreciation. So as you debit depreciation, you credit accumulated depreciation. So you go to accumulated depreciation and building. So you start with the building. How much was the amount? So the amount was 1200. This one, huh? Yeah. So that 1200, you just drag for equipment and for motor vehicle. So it will adjust automatically. Yeah. So that's the double entry for depreciation. So we are done with additional information number 5. Then we go to additional information number 6, which I think is the last one. The directors have proposed that a dividend be paid to preference shareholders and to the ordinary shareholders at 10% after transfer of shillings 11 million to the general reserve. So here we'll have 2 different transactions. So the first one we have dividend paid. Dividend paid. So I'll combine them instead of doing them separately for both preference and ordinary. So I just say dividend paid, and that's an expense. That's an expense. That is an expense. So I'll debit that. So I'll say equals to bracket because I want to combine. So I'll start with the preference. So what was the rate for the preference dividend? So it was 10% of 10,000. So just come here and say equals to 10% times the value of the preference, which is 10,000. Then I'll add to now the dividend, the ordinary share dividend. Yeah, so ordinary share, we are told that it was being given at 10% also. So just take 10%. You multiply by the ordinary shares. Yeah, the total ordinary shares, which is 80,000. So then you close the bracket and you enter. So once you enter, the dividend paid was 9,000. So you debit the dividend paid for 9,000 as you credit the proposed dividend account. Yeah, the proposed dividend is now a liability. Yeah, they proposed a dividend of 9,000. So just come here and do the double entry by crediting 9,000 on that other side. Then there was, so I'm done with the first part of additional information number 6. Then there was this after transfer of shillings 11,000 to 11 million to the general reserve. So I'll just come here. We have a general reserve account up there. So I'll check for the first entry. So The first entry, we'll have the appropriation account because this money was coming from the appropriation account, the money that we transfer into the general reserve. So appropriation account will debit it here with 11,000. We are told that it was 11,000 that was transferred. Yeah, then the double entry for this, it was transferred where? To the general reserve. So I'll credit the general reserves account. I'll credit the general reserves account. Yeah, so I'll credit with the same amount, which is 11,000. Credit with the same amount, which is 11,000. Yeah, and that's bring us to the end of our adjustments, because the adjustments are the additional information. Yeah, so we have adjusted and you can see it's balancing at 123,690, 123,690. So therefore, after doing the adjustment, now we can now work out the adjusted trial balance. So I'll start here. So ordinary shares was 80. Yeah, and as you can see, there's preference all the way up to share premium. So I just drag up to share premium. Yeah, then on general reserve, there was an adjustment. So I'll take 4,000. It is on the credit side. I'll add to 11,000 because both are on the credit side. The increase. So we'll have 15,000. Retained earnings, we'll have 12,000. Then inventory, we'll have that. Yeah, then cost of sales, I'll just drag because it's still on the debit side. There was no adjustment. 8% debenture on the credit side. There was no adjustment. Then trade receivables is on the debit side. Yeah, it was 69, but you can see we had an adjustment on the credit side, which is the allowance for doubtful debt. So it will reduce. So because it's on the credit side, so you subtract 34.50. Subtract 34.50. Then trade payable is on the credit side. So you pick it. Then land at cost, debit side. Yeah, then you drag. Let me drag it up to motor vehicle at cost. Motor vehicle at cost. Then I'll come now to accumulated depreciation. So I'll start with the building. Yeah, so so both are on the credit side, adjustments and the original trial balance. So you'll take that value and you add to this here because it increases the accumulated depreciation. So I'll drag this also up to here because the format has copied there, and both are on the credit sides. Then sales, there was no adjustments. I'll just put it on the credit side. Then we have rent received. So rent received is also an income, so it will be on the credit side. So I'll take 700, and there was an adjustment which is also on the credit side of 20. So it will increase that. Yeah. Then allowance for doubtful debts, it's on the credit side. Yeah, so you see it was a reduction. So whenever there's a reduction, so we'll credit. So we'll get the difference on the reduction on allowance for doubtful debt. So that's the decrease is what we'll include here, the 1,500. Then bank overdraft is a liability. So I'll just drag to get it at 65,000. So interest on debenture is an expense. So there will be an increase. I'll take the original one, 600, plus the one on the adjustment because both appear on the debit side. Yeah, that's the secret. Both appear on the debit side. Then administrative expenses, we'll have this. Then we have cash in hand. There was also an increase in cash in hand because they all fall on the debit side. So I'll pick that and add 20. I'll pick that and add 20. So we'll have also sales and distribution cost, which is that. Then prepayment. Sorry. Sales and distribution. Sorry. We had this 78,000, but remember the adjustment appear on the credit side. So I'll subtract that because it was a prepayment. Yeah, it was a prepayment. So I'll reduce it with that amount. Yeah, I think that's okay. Then prepayment, the debit side, there's no adjustment. Then we have corporation tax. It's also on the debit side. Then we have that. Yeah, so we'll have accruals on the credit side. Then that's accruals. Then depreciation. Sorry, let me not go there. So depreciation will be on all on the debit. Yeah, so I'll drag up to dividend paid. Yeah, so I'll drag all the way up to dividend paid that way. Yeah, then the proposed dividend now here will be on the credit side. Then I'll finally have the appropriation account on the debit side. Let us see if it's balanced. Yeah, so it balances at 131,304,180. Yeah, when you adjust, it balances at 1324,180, 1324,180, 1324,180. And that's how you're supposed to do part one of this question. And this is a question that they will even test in your exam, yeah, how to prepare an audit schedule. Yeah, so do more practice on that. Yeah, so it balances at those values. So we have the original trial balance, we have the adjusted trial balance adjustments, then we have the adjusted trial balance. Okay, so I'll go to the second part of the question. Yeah, which is also critical. Part B, you have been provided with a summary of Karimu Limited, a listed company balances. So we are given profit before tax, revenue, and total assets. So determine the planning materiality for the audit based on the revenue, profit before tax, and total asset. Justify your answer. So I say here, you will check at the nature of the company before you choose the benchmark. Yeah, before you choose the benchmark, you look at the nature of the company. The company we are told is a manufacturing. First, we are told is a listed company, is a listed manufacturing company. So a listed company is a company that appears on the stock exchange, that trades on the stock market. And we say that a listed company and a new client to an audit firm, those are high risk clients. Those are high risk clients because a listed company has many stakeholders, i.e. shareholders. So it's a high risk company. So first to check, the company is a manufacturing. So it means that this company is a profit oriented company. So the first thing is for you to identify this company. So it is a profit oriented company. Profit oriented company. So once you know that, then now you can now determine if it is profit oriented company. Then you ask yourself, which benchmark should I pick? Is it profit before tax, revenue, or total assets? So assets, total assets, I told you that you only use it as an auditor because this is based on professional judgment. As an auditor, you only use total asset if this was an investment company. So automatically, I'll disqualify total asset because it's a manufacturing company. It's not an investment company. Then I'll remain with revenue and profit before tax. So the best benchmark for profit-oriented company is the profit before tax. Yeah, so the profit before tax will be the benchmark. So the benchmark will be PBT. So identify PBT. Yeah, so PBT, after I identify that, the profit before tax was how much? It was how much? Sorry. Yeah, it was 5,000. Yeah, because we are working with shillings in thousands, so don't worry about that. So it was 5,000. So this 5,000 is what we'll be able to identify to determine the planning materiality. Yeah. So I've said it's profit-oriented company, and we are going to use profit before tax as the benchmark. So how are we going to calculate the materiality? So we are going to look at the risk versus materiality. So materiality under profit before tax is always on the highest. It's always 5%. So let me say materiality. Yeah, materiality is 5% to 10%. So it means the lowest will be 5%, while the highest you take 10%. So what is the planning materiality in this case now? So materiality. Yeah, so this will now, will we use 5% or 10%? So this, you go back to the question. You check whether the client is a high risk client. So what did I define as high risk client? High risk client is a client that is listed or a new client. And the examiners told us that the client was a listed company. They are very specific, a listed company. So listed company are high risk company to an audit firm because they have so many shareholders. So what did we say? We said that there was an inverse relationship between materiality and risk. So when the risk is higher, the materiality is low. When the risk is higher, the materiality is low. And we said when the risk is low, materiality is higher. So in this case, the risk is higher because we have a listed company. So it means that we are going to use the percentage, the low percentage for materiality. So you just come and say materiality will be 5% times 5,000. Yeah, so materiality will be 250. Materiality will be 250. And that you get your answer. You have determined the planning materiality for the audit based on, and I've justified my answer by stating that this is a profit-oriented company. Yeah, and that's why I'm using profit before tax, and I've used the 5% because this is a listed company. So once you get 250, you have justified your answer. So the correct answer here is that materiality was 250. Then we go to the last part. Part 2, you have been given the following transactions. Please determine the transactions that are material by carrying out performance materiality based on one above. So one above is this 250. So we'll use this 250 to determine whether these transactions are material or immaterial to the company. So we have 350,000. So remember, this 250, because the shillings were in 1,000, is 250,000. Sawa, it's not 250, so it's 250,000. So this 350,000 is 350. Yeah. So because the shillings were in 1,000. So we materiality now here will be, so materiality is 250. So what is materiality? So anything that will be above 250 will be material to an auditor. Yeah. So any value above 250,000 will be material. So when you check A, B, and C, which value is above 250? Yeah, that's what the examiner is asking from you. So the value is 350,000 because 125 and 145,000 are below 250. So they are immaterial. Whether they have been misstated, they are immaterial to make any change. Yeah. So the material amount here is 350. So that was the correct answer under this. So you ask yourself, do we leave 125 and 145 because they are below 250? No, we do what we call performance materiality. So you carry out what we call performance materiality. Performance materiality. So performance materiality means that you will work with a value that is below. Yeah, the value that will be below performance materiality, that value, we say that it's material. So how do we do this? So you'll take, so I'll say like, you just guess a number. So let me say maybe 75% of 250,000. of the material amount. So you take 75% times 250. Which value do we have? 187,500. So we have 187,500. So let us see if 125 and 145 will be greater than this. You can see they're not greater. But what you do by performance materiality, you aggregate these two values, the remaining values, yeah? So we take 125,000, so we say equals to 125,000 plus 145,000. Sorry. I don't know why it's giving me value. So let me just undo that. Let me undo that. Yeah, so we'll have 125,000 plus 145,000. Let me just add it manually. So you have 270,000. So when you aggregate these two values under performance materiality, so you can see this value now, 270,000 is greater than 187,500. So it means that, what does that mean? That means that even these values are material when they are aggregated. Yeah, when you add the two, when they're aggregated, and that's what we call performance materiality. They are greater than this value. So when I say here that by carrying out performance materiality, so it means that all these values, all these transactions are now material when you carry out performance materiality. But when you leave your material test at the planning level, then it's only 350 that will be material. But when you go overboard and carry out what we call performance materiality, then you aggregate these two values, which are not material, which are immaterial, and you find out that they're greater than the performance materiality value, which is 75% of 250. Yeah, so it's greater than that. So that tells you that all these values now, you can justify that through carrying out performance materiality based on the above transaction. I say that all these values are material. All these values are material. And to give you reasons as per my explanation. So thank you so much. If you are watching this video for the first time, please take a minute also to subscribe to my channel. Thank you so much and see you next time. Have a blessed evening.